Hey guys, this is Emily. As I mentioned in our first class last week, I am out at work for a leadership conference, so this remainder of Chapter 1 is going to be taught online. We do have Dr. Teets. She is going to be kind of covering the Learning Objective 4 that we did not get to cover the first week during class. And then I'm going to try to finish up with Objective 5 and kind of give you some other information. I'm also going to start off this class with kind of a reminder or just kind of a refresh of some of the stuff we talked about last week, because I feel like some of you guys had some questions, so I just thought it might be helpful to kind of cover some of that information. Okay, so let's first kind of refresh our minds on, let's say, what assets are. So again, assets are what we own. So in the case of this example, this person has $1,000 in cash. So that is that person's own money. They also have a car. Now the car price that they bought it for is $5,000. Now keep in mind that you're typically not going to pay all of that cash up front for a car. You usually take out a car loan. So in this situation, let's assume that this person, spent $1,000 of their own money and then they took out a loan for $4,000. So in all actuality, the car itself is worth $5,000, but we've only spent $1,000 of our cash. So that basically means that the bank owns that other $4,000 of that car. But eventually, once we pay that off, we will own that full $5,000. So it's because of that is the car's actual value. That is what we're seeing as an asset for us, for the full $5,000, not just the $1,000 that we've paid for as of now. It's kind of this future value. Same thing for a house. So their house is worth $100,000. Again, they did not pay $100,000 up front. Let's say that they spent, so much money up front, and the remainder of it is now they paid for it with the loan. So the same type of concept with a car. But when you're thinking about the assets that you own, you want to think about the full value. So if we're thinking about the full value in this situation, this person has $106,000. That's the cash, the car, and the house. Now, if we look at what they owe, their liabilities, again, this brings up the thought process of the car loan, the mortgage. So in this situation, if we think about the car, this person, again, remember the car is $5,000. That was the value of it. So that means that they actually paid $2,000 in cash. The remainder, that $3,000, they took out with a loan to pay for that car. Now for the house, it looks like they have a $60,000 mortgage. So that means they paid $40,000 up front with their own money, and then they had to take out the rest on a loan, the $60,000. So keep in mind, as of right now, this is day one, they have these loans. Technically, the bank owns $60,000 of their house and also $3,000 of their car. So in this situation, she has liabilities, stuff that she owes, money that she owes, of $63,000, and that is just the mortgage and the car loan. And then that takes us back to her net worth, or AKA equity, as we talked about in class. So again, think about the total value of what she owns. Total value of the car, the cash, the house is $106,000. But she did not pay $106,000 in cash for all those things. She only paid a portion for it. So the piece that she did not pay for cash, the $63,000, the liabilities that she owes, needs to be backed out from that $106,000, and that is her net worth at that point in time. So right now, she basically owns $43,000 of all of those assets because the bank owns a piece of it. Now, eventually, over time, she will pay off that $63,000, and her net worth will grow to that $106,000. But at this point in time, we're looking at what she owns, what she owes on what she owns. Basically, she owes the bank, she owes for the car loan, and what's left over is her net worth. And again, here's kind of that refresher of that accounting equation. Remember, whenever it says accounting equation, this is the same for a person or a business, is going to be assets equals liabilities plus net worth. And once you listen to Dr. Teets, the Objective 4 presentation, she'll go into balance sheets, income statements, That's where this is really going to pop out, because this is the balance sheet equation basically, but it is still the basic accounting equation. So that'll kind of give you a little bit more background and further understanding on why this essentially balances. But remember, it's just an equation. It's your assets, what you own, is basically built up of what you owe on it and your net worth. It's just a math problem, and we can rearrange that any way we want to. And again, here's a refresher. For business terms, it is basically the same. It's just instead of saying net worth, they call it equity. And again, here's a highlight where you can, again, rearrange the equation to figure out any piece of it. So if you know what your assets and liabilities are, you're going to be able to calculate your equity. If you know what your equity and liabilities are, you're going to be able to get your assets. Just a simple thing here to keep in mind. So when you see that, just know that there's those three components: assets equals liabilities plus equity, and you can solve for any of those components as long as you have the two pieces. Okay, and then this is the same problem that we went over in class. Just another highlight for you to kind of think through that equation. Again, a business has $20,000 in assets. So let's assume maybe they have, and you can think about it as a person as well if that helps you kind of think through it. But let's say this company has $10,000 in a car and has $10,000 in cash. So that is making up their $20,000. But keep in mind, maybe they had to take out an $8,000 loan to pay for that car. So they may have only put $20,000 or $2,000 down in cash, and they still owe that $8,000, which is their liability. So if we do the accounting equation, so if we take our assets, minus our liabilities, that is going to equal our equity, which is this $12,000. Well, thanks, guys. I just, again, wanted to give you a little refresh on that information just to kind of help with anything from that first night. And now you guys can continue on to the Learning Objective 4 videos with Dr. Teets. Again, let me know if you have any questions, and thanks, guys.